Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from hundreds of successful individuals from around the world. I am your host, Ashutosh Garg, and today I'm delighted to welcome a very accomplished financial or a fintech entrepreneur from Chennai, India, Mukesh Bobna. Mukesh, welcome to the show.
Thank you, Ashutosh, for having me on the brand called you. It's been a
Thank you.
pleasure to
Thank you.
talk to you.
Thank you. Mukesh is the founder and CEO of Monexo, which is an online peer-to-peer lending marketplace. So Mukesh, let's talk Monexo. Tell me about this venture and what was your motivation to start it?
So the seed of Monexo was in my head from 2006.
Mm-hmm.
I was working at Citi in Singapore that time, and I was sent to a conference, a very small conference, about 40 bankers from all over leading banks, European, US, Asian banks, who were talking about the future of banking. And there was one lone person out there who was not from bank, and he was the founder of Zopa, the first peer-to-peer lending company in UK and in the world. I was next to him, and what he told me was they were meeting at coffee shops in person, and there were lenders on one side, and there were small, medium enterprises on the other side looking for money because banks didn't lend them. And he said he's been doing it for last 24 months very quietly. Now it's going digital, and customers are coming and putting their money online. There was no regulation that time. That fascinated me. It left a seed in my head. I continued my journey as a banker. It faded away in my back. 2008 crisis happened, and we as bankers shuddered and closed all doors for lending across the globe. That time it took me back to US quite regularly because I was working with Citi. Citi had its head office, so we had a lot of strategy meetings on how to overcome the crisis. We were in the thick of crisis, and I started seeing companies like Lending Club and Prosper come through. Behold, I was starting to think as I finished my 23 years with Citi, am I really going to be here for long? And I was still in Hong Kong, and I started working with China as a destination quite regularly. And I started seeing this happening there. So it was like seed in 2006, again, revival of thoughts in 2008 to 9, and I saw it 2016, 17, this happening. And I said, I've done this. I've worked in the kitchen, if I may say, in the banking world. Can I go and disrupt the banking world with my own experience? And that's what I started Monexo with.
Okay. And for our viewers and listeners, how does peer-to-peer lending work?
This is the oldest industry, if I may say so. We have been lending to each other as individuals for millions of years.
Correct.
We don't, right? We give it to our cousins, we give it to our brother, we give it to our sister, we give it to our friends, right? For short-term need, long-term need, quantum difference. But that's what is peer-to-peer lending. Now, what is this happening is two things are happening. One, there you know the person, then that is why you give it. It has one motive of helping, and sometimes a motive of earning interest. So first, we are removing this known people to known people. And the second is it's done digitally. So in a sari market, sari traders give loans to each other. In diamond market, diamond guys give loans to each other. In steel market, now what we are saying is, no, you don't need to be within your geography. If you really want to earn income, there's a better way of doing digitally and without the people. That's what is peer-to-peer lending in a very simple way.
Okay. And, we'll come to some of the challenges, but from a Monexo perspective, and as an entrepreneur who's come out of the professional world, what have been some of your challenges and learnings as you have scaled up?
So first key challenge as a professional, and when you work in a large organization like Citi, you think everything is possible because you have unlimited resources. You have the best of breed of people, right? And there's possible iterations to be done, even if you're lag on time.
Mm.
But as an entrepreneur, first resource,
Mm.
whether it's people, money, or time, all three are very little for you,
Okay.
right? So you have to prioritize a lot.
Mm.
You have to be really, really saying as narrow as possible. And somebody told me this very, very nicely. He said, one wall and one nail.
Mm-hmm.
Figure out how to get one nail in one wall. Don't try and sort of say, I'll build a wall. No, just one nail.
Okay.
So find the narrow segment which you want to serve and serve it well,
Mm.
and then move forward. So
Okay.
that is a challenge which you come from a professional world.
Mm.
Second part is today, digital world is rapidly changing. People think digital is very simple. I think opening a branch is one-time expense, but technology is a consistent expense.
Correct.
You have to be continuously keep changing, right? If you make it simple, once a restaurant opens, they don't change their furniture and fixtures for next 2 3 years, right? But here you may have to change it every 2 months or 3 months because you are learning rapidly whether the customer wants to go the route that you want to take them.
Mm-hmm.
The technology providers change, the Googles of the world change the rules, and
Mm.
you have to continuously adopt. That's the second. The third is people.
Mm.
The Gen Y or Gen Z, they are really a different breed to engage with.
Mm.
And if you want to engage with them, you have to understand them very, very well.
Correct.
This is where you start realizing the generation gap for the first time very, very
Mm.
clearly. And how you engage with them to build
Amazing.
an organization is amazing. It's a fantastic.
Fantastic. So, when I was reading about you, there's a comment which says that Monexo is to finance what Uber and Ola is to transport. Help me understand this with maybe an example or an anecdote.
Sure. We all have heard this brand called Avis.
Mm.
Avis is
Try
equal
harder.
to, yes. Avis is like bank. Avis buys cars, and then when we want to drive in US, we want to drive in Singapore, we want to drive to Australia, we can go to their app and book the car. We can drive from point A to point B and leave it.
Correct.
So they are a asset heavy company.
Mm.
What Uber Ola did was they said, no, we are just a technology company. We don't have the cars, but we have people who want to drive their own cars. And you and me are passengers. So they came out with various segments, and now they started with, as they said, very small, only within the city. Now they have intracity, intercity, everything they've captured. Now it's become very useful, right? When earlier we used to travel to an Indian country from overseas, there would be a man standing with a whiteboard. Now it's not required actually. Wherever you travel. So that's what Uber Ola did to Avis. Peer-to-peer lending, if you look at similarly, we put deposits in the bank. Bank is up 3 to 4% nowadays, and they can lend it as high as on a credit card at 44%. They have on their balance sheet risks and rewards. What peer-to-peer lending is doing is saying the risk reward should go between the savers and the borrowers, and we as a platform are only a technology and service provider.
Very interesting. Very, very interesting. So now let's talk about the Monexo platform, Mukesh. If there are you and I'm going to, I come to you and say, Mukesh, I need 1 lakh rupees, and you say, I've got 1 lakh rupees. We agree on the rate of interest, and you give me the money. Now, what are the risks that are associated with peer-to-peer lending?
Sure. Before I get to risks, first I have to say we don't do 1:1 transaction.
I see.
So let's assume Ashutosh wants to invest 1 lakh rupees on a peer-to-peer lending platform, Monexo. Ashutosh's 1 lakh rupee will be broken into 100 units of 1,000 rupees each.
Okay.
And then they will be given to 100 different individuals.
I see.
So that's the first mitigation, that you're not giving 1:1 money to anybody. So in this example, let's assume Mr. A is a borrower. He wants to borrow 1 lakh rupee. Ashutosh as a lender is giving 1,000 rupees.
I see.
And he got hundreds of such people, Mr. A's, with different risk profiles, risk bands, which is there. The first. Now, if again I have to use another brand, but if you look at matrimonial sites, right? Today you can go and list, I can go and list, and we can say we are 25 years old and we can put any picture, nobody verifies.
Correct.
But in our line of service, we have to verify everything.
Absolutely.
We have to first verify the person who's getting listed as a borrower, is he a genuine human being first? Is not a fake ID. So that is done. Second is, does he have the ability to pay? Right? I don't have a crystal ball what will happen in the future, but does today he have enough means to borrow what he's trying to borrow, and can he repay that? And third is, has he done that consistently in the past? Did he have lots of ups and downs in life? Right? Or he consistently sailed through by paying his loan on time if he has a record.
Okay.
These three broad checks are done in different ways, and then only a customer, a borrower here, assigned a risk rating and an interest rate. So the lenders and borrowers don't sort of go around negotiating interest rate. Monexo or peer-to-peer lending platform does that risk assessment and tells you this Mr. A can be lent at 15%, this Mr. A can be lent at 21%. And you have to just, like a mutual fund, agree saying, yes, I want to give 1,000 rupees or not.
I see. So you mean if I give you 1 lakh rupees, which you said is broken up into 100 units, yes, I will have to say yes to 100 such transactions.
And there, again, through technology, we've automated in two ways. One, where you come in the platform and buy one by one each of those 100 borrowers, and you can view their profile. Profile means no personal details like name, his PAN details will not be given to you.
Correct.
But there will be enough data for you to figure out what he looks like. However, there's other way which you call auto invest. So where we say you can build a conservative portfolio, moderate risk portfolio, aggressive risk portfolio, or a diversified portfolio. And you can choose your portfolio and say, I want to put all my 100 units in conservative portfolio, and the system will take care of that.
And the next thing that I wanted to check with you based on your comment was that the pricing of the loan is a function of my ability to, or my credit rating. Is that right?
One of the factors is your ability, current ability, and current indebtedness, and your past behavior. So all this, and there are various data points. Now in India, the credit bureau came in 2008. There are 30 million people in that credit bureau. So for those 30 million, you can see their past performance. But for the remaining 70 million people, you don't have that. So you have to use some surrogates, which now is being recognized in the lending industry as alternate data. And India is digital. We have almost 100% penetration of mobile phone. And there are alternate data available in your mobile phone, which can help you underwrite a customer who's not in credit bureau.
I see. And now from a lender's perspective, does this mean that if 1/100th of my, and I'm just using arbitrary numbers, if 1/100th of my money is going at 15% and something is going at 12% and something is going 13%, all that will become a weighted average return for me?
Yes. So at Monexo, we say earn 2x of fixed deposits.
I see.
We have seen the plummeting of fixed deposit rates from 9.5% in the past few years to now almost 5.5%, 6%, and even lower sometimes. So it is inflation adjusted, it is inflation and tax adjusted, it's a negative return. So we on our platform are working consistently to give a 13% risk adjusted return to our lenders.
I see.
So if you look at it in 100 loans of yours, some are at 12, some are at 15, some are at 18, some are at 21, weighted average, and then remove few loans will be defaulted. We don't have a crystal ball to say what will happen in the future. Sure. Nobody could have predicted COVID will happen.
Absolutely right.
It will happen, and that has a ramification on the quality of the borrowers over a future, right? But by diversification, we make sure that you earn 2x of fixed deposit regularly.
Amazing. So my next question to you, Mukesh, is that since this is money, and money is always very highly regulated in every country, what is the RBI or the government position on peer-to-peer lending?
Thank you, Ashutosh, for asking. So we started in India in 2016, end of December, when Raghuram Rajan was there. And we had met a couple of times and talked about how globally this is changing. And he himself, being a very international person, he was pro for this. And before he left, he published a draft discussion paper, which came into a regulation in 2017 end. And all peer-to-peer lending companies are now regulated as per RBI. And within, they have to get a non-banking finance company, NBFC license, and there's a category called NBFC peer-to-peer lending.
Okay.
So we are under that. In that, we have to meet capital adequacy norms. We have to meet IT standard norms. We have to have people norms. It says we cannot give guaranteed return. It's not like a deposit. So there are guidelines which we have to meet, and they are subject to audit and supervision from RBI regulator.
So if I can ask you a slightly provocative question, and please excuse me if you think it is incorrect, but we've in India, we've had a large number of chit fund companies where they go and take small sums of money from millions of people, and then they lend out the money this way. How is peer-to-peer lending different from chit fund?
Awesome. I will explain the way I understand chit fund, and then I'll bring out the stark difference there.
Okay.
So in chit funds, let's assume we are putting 1,000 rupee every month.
Correct.
Right? And in that same group of whatever 50 or 100 people, one guy will bid for the money. And if 4 people bid, the highest bidder gets the money. Right? That means for the benefit of the lenders, you have to bid higher.
Okay.
Right? That's number one. So highest bidder, it's not risk. It's the highest bidder.
Okay.
That's the first stark difference. And there's nobody doing credit underwriting. It's a purely bidding system. Two, there's no recourse. If the person who took the loan and did not pay, chit funds don't participate in the credit bureaus of India. There are 4 credit bureaus. They don't participate in that.
Correct.
So the borrower goes scot-free in a way. Right? In today's day and age, just like we have a fear that our driving license, if you drive fast, we do drunken driving, we'll get negative points and we can't drive after certain points. Similarly, credit bureau is the same thing in the financial world. You default. If Monexo reports into your bureau that you are defaulter, all the formal financial institutions will not give you loans.
I see.
Right? So first, it's not about highest bidding, it's about risk underwriting from peer-to-peer lending perspective. 2, we do write into all the bureaus that you are paying or you're not paying. That has a long-term ramification. And chit funds are still misunderstood. I think, in my view, if peer-to-peer lending becomes successful, that industry is at risk in a large way, which is kind of unregulated, informal, that is at risk. But the challenge is for the peer-to-peer lending industries to go to that level and grassroots marketing of what chit funds have been able to do it over the last 40 years in India.
Fascinating. So I have time for a couple of more questions. You have explained to me how for borrowers risk gets mitigated because the amount that I would like to put in gets broken up into small packets. What is the recourse I would have as a lender in case of a default?
Okay. So first of all, I have to use this term very carefully because regulators will go very bananas on this. Think of you are investing like a mutual fund. When you invest in mutual fund, there's an investor committee in the company which takes care of the work which you're doing, right? They decide it's a large cap fund, mid-cap fund or a small-cap fund, and accordingly they tell you what they will invest in.
Correct.
If you and me are investing, all of us are investing in large cap funds of HDFC, ICICI, at the end of it, 15 stocks we're buying.
Mm.
Here, you're buying different kind of assets. Now you have your work cut out. You're running a brand called You. I'm running my organization here. Somebody's a doctor, somebody's a lawyer. Their objective is to earn interest regularly, not go after that 1,000 rupee which they lent out in case he defaults. That is where Monexo as a service provider. So we are technology provider and service provider. So in this, we follow for that one loan. Going back to that example, Mr. A took 1 lakh rupee. For Monexo, that is 1 lakh rupee. For you, it's 1,000 rupee. So Monexo has telecalling unit. It has email services. It has field collectors. It has legal services to go after that borrower to collect the money within the RBI norms. Beyond that, we are consistently reporting in the credit bureau that Mr. A is not paying. So the whole industry will be beware and don't give him any further credit till he pays us. So it acts as a mitigant to all the other lenders. Makes Mr. A think twice before defaulting. And all the lenders continue doing what they are doing, doctor, lawyer, etc. When Monexo takes the care of recovering the loan from the borrower and again give money back to all the lenders who have invested on that loan.
Fascinating. So my last question to you, and now this is from the perspective of the borrower. And it's in two parts. Number one, is it faster for a borrower to come to a peer-to-peer lending to get a loan? And number two, is it cheaper?
Yes, and I'll explain why. But before that, I'll go to a US example.
Okay.
Today, a company called Lending Club, when it lists a loan, it's funded in 3 minutes.
Okay.
And it does close to $3 to $4 billion every quarter.
Wow.
Right? So imagine in a country which is huge geographically, but less populated, and we thought it's the mecca of banking, everything has been done there, so why peer-to-peer lending?
Correct.
In India, banking is still progressing, but thanks to Indian initiative of India Stack, UPI, all the technology which has come, Aadhaar, right? With this, today, the technology which we have built actually can list the loan. Actually, my vision for Monexo internally, and I'll use Hindi here, दिन के 12, रात के 12, Sunday हो या Monday, borrower आके अपना लोन खुद भर सके और marketplace में जा सके.
Wow.
And behind the scene, because every lender is doing auto invest, the money can also go out within few minutes. Actually, and we've seen it. We've had scenarios where loans have got filled in 1 or 2 minutes for 1 lakh of rupees and got funded into the banking account. Now, that is still an isolated event in our life, but the way technology is shaping up, it's not a distant future where somebody needs an emergency money at night. He'll be able to come to our platform through an app, fill up the application, and within 5 minutes, the money is in his bank account.
Wow. Amazing. Amazing. So one last question I have to ask you this, and this is from the lender's perspective. Just like you say that a borrower, if there's an emergency and they want their money and you can give it them in 5 minutes time, if a lender wants to pull out their money in 5 minutes or whatever time, is that possible or are you locked in?
No, it is possible. In fact, that's an innovation we were the first one to do. What we've created is a secondary market. So now let's assume, Ashutosh, you had lent hundreds of loans to Mr. A1 to 800.
Correct.
3 months have gone by. For whatever reason, you need this 1 lakh rupee back. You can come onto our platform and say, I want my money back. And Mukesh is a new lender. He says, hey, Ashutosh is selling. Now, for me as Mukesh, I see, okay, they had these 100 loans, have 3 month repayment history on Monexo. So it's a safer loan to buy. So I go and buy your loans. I don't go and participate in the primary market. I participate in the secondary market.
I see.
So we have that feature on our platform and people use it quite regularly.
Wow. Wow. Mukesh, on that note, thank you so much. I have learned a completely new financial product that I wasn't even aware of that existed. Thank you for talking to me at such length and explaining to me and to all our viewers and listeners how peer-to-peer lending works, what are the vulnerabilities that you have countered so well, what are the challenges you have faced as an entrepreneur. And I can only say good luck to you, because this seems to be a very, very new product that I will certainly reach out to you to see how I can get some better returns over fixed deposit. Thank you again.
Thank you very much, Ashutosh, for having me on this show. And I'm a big fan of this show, The Brand Called You.
Thank you so much. Thank you for listening to The Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for The Brand Called You.